Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the resistance for the Australian dollar at 67.65 has once again proven too difficult to clear. Has many challenges, at least 4 or 5 times, the market has retreated, but still finding support roughly around 67.15. Whilst in a holding pattern, traders now look to this Tuesday's RBA, or the Reserve Bank of Australia's board meeting, and the official cash rate announcement. The RBA is expected to lift its cash rate by 25 basis points from 3.35% to 3.60%. Meanwhile, investors will also be cautious this week when Federal Reserve Chairman Jerome Powell sits for his 2-day semi-annual testimony at Capitol Hill. The market will be keeping a very close watch to see what Powell has to say about inflation and also interest rate hikes. Looking ahead though, the US Federal Open Market Committee, or the FOMC, is not likely to change its hawkish stance anytime soon when they sit on the March 21st, 22nd with an expected 25 basis point increase. So as I mentioned, all eyes at 2:30 for the RBA announcement, but keep a close watch on the actual statement, because if it is a little bit to the dovish side, we may see the market weaken off and look back towards the challenge of 67.15, which is today's low, and around there could see the base challenge of 66.50.70, but I'm not getting bearish overly due to the fact is that the technicals are picking up slightly. So therefore we most probably see the range continue at 67.15 to 67.65. But do take note, if we get a break of 68.10, it would be more to the bullish case and also confirm this engulfing candle and reinstate the upside towards 69 cents. The market for the euro still remains somewhat strong as it circulates higher towards the 107 region, with the cap holding at 107.0515. I feel the market may actually respond to a negative like previously back in late January from this region. And when I say negative, probably a rejection and look back towards the bottom side of the range around 105.2025, while the dollar index, which measures the greenback strength against a basket of 6 major currencies, currently sits around 104.22. With all eyes on the Fed for 2 days this week, we also get the main event, which is the non-farm payrolls, which is expected to show a rise of 224,000 jobs that were created in February, and a slowdown in job growth, that is, from January's unexpected strong reading that showed 517,000 jobs were added. The unemployment rate is expected to remain steady at 3.4%, which is the lowest since 1969. The dollar yen is also in a holding pattern ahead of a potentially big week of data, along with that with Fed Powell and also with the non-farm payrolls. So we no doubt will see some whippiness into the market here as the technicals have somewhat dropped since the break above 136. I'm not going to get bearish as of yet, as the market still has potentially, and if the dollar does rebound to its objective of 106, then this would put a trajectory to the upside around 137, and the broader target that I'm calling to 139 to 142. Support at this stage is seen around 135.30. Like dollar yen, the market for sterling is also drifting in a tight conservative range or consolidated range since Monday, and therefore looks towards the region of 120.70.75. Any pullback, I feel the market may actually respond like previously to a slightly bullish case from 119.30, but a break there would see further risk to the downside, as the technicals still are somewhat mixed, so it's very hard to really give any broader calls outside 118.30 to around 121.50.60. The gold is actually slightly weaker into the start of Tuesday's session as it eases away from the 1,864 to 74 cap. The market in general is breaking down, but we do need to see confirmation to support a bear case, or reinstate more to the fact. That is, a break of 1,838 would reinstate the downside down to 1,825, and maybe even looking towards this key level, which is at 1,786 to 89. As I mentioned, any upside attempts may find it rather difficult to sustain due to the recent price action back in January, where we saw good supply from that topside level. Keep an eye on these technicals and also the break if we see at 1,838. Well, it looks like oil's continuing to rally higher as it looks to the blue sky of $82 a barrel. I feel the market is getting a little bit ahead of itself and therefore could find resistance around that level. As we can see back in January, good supply, and even back here in November last year where the market found supply at $82 a barrel. If so, it would send the market back towards the bottom side of 78.5, maybe even lower, down towards $77.85 and reassess. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the interest rate report, and I hope you enjoy the rest of the day.